All right, guys, here we go. We are up over 100 grand. Well, we was up over 100 grand, so we'll let it drop back down just a little bit more on these trades. Have quite a few positions open, as you can see. No swap, so that just means the trades were actually open today. All right, so we're at 112. We'll close it out at about 120. I'm thinking this will get as far as 130. There it is, as soon as we called it. All right, 40. We'll start winding it down right about now and closing it out. 160, 170. All right, this is serious trading, guys, right here. You can hear my phone in the background binging. I should have turned that off. And this is expected to go lower, but with the amount of risk that we had on the table, we'll just go ahead and close it out. Okay, so let's look at, and this is actually a recap of the last strategy. So if you go back and look at the video titled I think it's Forex, RSI, and EMA or envelope strategy, it's the one where it says with the free code on my channel. So go check that out and make sure you guys subscribe, because there's a very important video coming next that you guys do not want to miss, and it is pertaining to this. So anyway, so on the screen we have the 20 period EMA, we have the envelopes, the 14 period, and then we have the 10 period RSI. Now the strategy is very, very simple, especially this is USD CHF, especially on something like this. It does work even if the market is very volatile. We are now on a 1 hour chart. So if you look at this, the trend, if you just look at, let's just look at this, the trend is going straight up for the most part. If we want to draw a trend line, it's going up basically. All right. What this strategy basically says is when the candlestick closes above, let's say across, first we'll say this is the first parameter, closes across this 20 period EMA and the top envelope, this is for buy order, we would wait for the candle, the next candle to close all the way outside of the envelope, and then we would get in to carry the market up. Now the exception to that is in a volatile market, you know, you have pullbacks. The market just, I mean, it goes straight, the trend goes straight up, but the market itself, like the price action, doesn't just go straight up. You know, it doesn't just go straight up. You see there's pullbacks. So when the candlestick crosses over and it closes above, you can wait for a pullback, which the pullback can be to the envelope here, the upper envelope as they call it, or the 20 period EMA, which would be right up in here. We would definitely wouldn't trade right here. We could get in right here and then carry the market higher. So that's, we'll look at a few more examples, but that is the general principle. Again, here's the opposite order. Candlestick closes below the 20 period EMA and below this envelope right here. This candlestick right here, this candlestick closes below both the 20 period EMA and the lower envelope line right here, but it does not, this wick right here touches in this area right here. So we want a candle where the wick doesn't even go into this area. So we want this candle to show up before we get in right here. All right, now if we were looking for a pullback here, chances are we would miss the trade, because if you notice, there is no pullback. You know, this closes across and then we wait for this as a confirmation, jump in on the next trade, or wait for a pullback. There is no pullback. Now, is there an indication that there probably would not be a pullback? Well, yes, because you have this price action down here, you have this. So if you was just to draw a trend line up right here, this is the trend, it broke the trend line. And this is the first candle that closes below the trend line right here. So then that would give you somewhat of an indication that price may not pull back. You definitely want to be prepared for a pullback. So you would say, well, if I get in here, price could pull back 11 pips, or it could pull back possibly 28 pips, and be prepared to take that loss if it goes back that far. But if we would have just used a general principle, waited for price to close below the 20 EMA and the lower envelope, and then waited for the entire range of the candle to close below and jumped in, then we would have been looking at a potential, because you can't time the exact bottom of the market, you would have been looking of a potential 54 pips or so. All right. And again, you cannot time the bottom of the market. So, I mean, you could have jumped in here and got out after this candle right here. I mean, think about it. If you're right here, you don't know if the market's going to bounce and go all the way back up at this point. Who knows? Now, something you could have did also is you could have waited until after you enter the trade. You notice that this right here has not crossed back above or touched this line right here. So it goes down, it gets close, it comes down. Now, I probably would have faked you out here because when this candle is in play right here, this will actually move up and down, up and down, up and down. All right. So, like I said, you can't really time the market. You will always leave profit on the table, but that is the general. I don't want to make this video too long, but that is the general rule here. Another reason another thing that we use is the RSI. So let's say that this candle closed below and we were looking for a sell trade. After the entire body or range of the candle closes below the 20 period EMA in the lower envelope, we go down here before we jump into the trade, or at the end of this candle, we go down here and make sure that the RSI is not below, for a sell order now, this is for a sell, is not below this line, and for a buy we make sure it's not above this line, because we don't want to get into a trade that is overbought or oversold. We want to catch it in the middle, and that's why we have these two points right here. But again, I recap and go over this strategy in another video, and I also create a expert advisor or auto trader using this exact same strategy, and then I show you guys the code in the screen. So if you want to pop open Meta Editor and type out the code, or if you want to go purchase the software, I don't own the company, I don't get anything for using EA Builder, but if you guys want to go over and use that, then that's just up to you. But that's what I use. I think it was 99 bucks at the time. I'm not sure how much it is now. So and the link I put in that last video description to EA Builder is not an affiliate link. I think one of the earlier videos, one of the first videos I made, had an affiliate link. I'm not even sure if it works, but anyway, so that is the strategy, and I want you guys to make sure you subscribe to the channel, because I do have a very important video I want to show you, and it is pertaining and related to this video. Also, be sure to drop your Cash App name in the description, because once this channel blows up, I will be revisiting these videos, and I want to make sure I take care of you guys for supporting the channel. Also, one very last thing, make sure that you leave a comment, and again, like the video, but subscribe. But make sure you guys leave a comment, again, letting me know if you think that the profit, the large amount of profit, is real or fake, and why. So I want you to leave that in the comments, all right? Because that is going to play into my next video that I'm going to make. All right, peace. Be sure you guys trade with caution, with patience. Be sure to be careful. Trade with great money management skills, and remember that Forex can and probably will wipe your account out, and you may lose all of your money. So be very careful trading, and that's kind of my disclaimer. We're not responsible for trade losses. So anyway, peace. We'll see you guys in the next video.